May the 30th, the House of Representatives says is putting together a public hearing, already calling for a memorandum to repeal the act that set up the ICRC, that's the Concession Regulatory Agency, and seeking to replace it with a new one to be called Public-Private Partnership Regulatory Commission Act of 2016. The bill, according to the legislators, will seek to strengthen and enhance the supervisory role of the Commission and effectively position it in PPP arrangements. Meantime, the acting President, Professor Yemi Osinbajo, yesterday chaired the economic management team, and they considered, alongside with the ministers and the head of the central bank, what funding options are available for the 2017 budget that is yet to be sent to the executive branch. And this morning, a raft of economic data in terms of commodities, petrol, kerosene, diesel, transportation, and food prices, selected food prices from the Bureau of Statistics, and of course inflation is the kingpin for this set of data that we're getting. Sources say that is coming in at 17.2 according to the statistics office. So Babajide Solanke is the head of research at FSDH Merchant Bank, and they pushed out a report late yesterday that says the economy is on momentum. Good morning. Thanks for coming.
Thanks, Bolson.
What are you folks seeing that perhaps I am not seeing?
It's evident. You know, when you look at the leading indicators, leading economic indicators, one of them is the Purchasers Managers Index. You know, it just came out, you know, released by the Central Bank of Nigeria, and it indicates, you know, that the economy, when you look at it from the perspective of private stock and private investment, is going up, and that's an indicator. So when you have a lead indicator like the Purchasing Managers Index, is an indicator that shows that the economy is growing. And we look at the context of the Nigerian economy, given that we're in a recession, that's positive for us, when we look at the non-manufacturing index itself. Of course, still hasn't crossed that threshold of 50%, which shows that it's growing, but improved to about 49%, nearing 50. And if you look at the stock market, there's a renewed, resurgent interest by investors, particularly coming from the factor of relative stability in the foreign exchange market. The central bank continues to flex its muscles because the exchange rate policy that we have in Nigeria, the managed float exchange rate system. Let's forget the nomenclature about the flexible exchange rate system the central bank is saying, but it's still a managed float because the central bank supplied 80% of foreign exchange to the market, and of course the improved crude oil production, the OPEC and non-OPEC arrangement of stabilizing prices has kind of given the central bank a war chest, to defend the currency. And if you check vis-a-vis the consumption and production pattern in the Nigerian system, in the Nigerian economy, you notice that it's very, very, very positively correlated with adequate supply of foreign exchange. So in the combination of all these factors, of course, oil being a part of the GDP, an important part of the GDP, when you look at it from not the output perspective, but in terms of the Naira, in terms of the revenue it brings in. All these indicators, or the combination of all of these, shows that the economy is getting out of the woods. A quick one
in the FX market before we step out of that. When we say that the market is stable, to the man on the street, and I'm going to keep going back to the man on the street because I'm one of them, what does it really mean? Does it mean that we have a single price that does not change, or it changes within perhaps a certain orbit, as it were, and the liquidity is assured? What does it mean when we say the market is stable? Folks see this 360, 365, then goes to 350, then goes to 370, and say, hey, what you said is stable.
Yeah, the last 2 points are made in terms of the exchange rate. Look at it from the perspective of the central bank's determination in terms of what their objective in terms of the exchange rate price is. They gave it a price and they give a band. That band means plus or minus 5%. So a plus or minus 5% range, with an exchange rate oscillation is a stable exchange rate in terms of it can be managed. Finally, to the point you raised, under valid argument, liquidity, readiness to supply the market. And you've seen that in terms of increasing the ability of the central bank to supply the market. You first saw it with relaxing the rules concerning PTA, BTA, and all of that. Then, of course, further, arranging the market for importers, for exporters, different market scenarios. So you've seen an increasing the capacity of the central bank to defend the value of the Naira. So that stability of the Naira naira is a key element for planning, for budgeting, for household expenditure, for firm expenditure, even for government in terms of its revenue, its fiscal expenditure outlay. So the last 2 points are made as key element for the stable naira, which is oscillating within an acceptable band as defined by the monetary authority and the exchange rate policy of the government, which is affected by the central bank. And secondly, liquidity, key element. So those are volatility means, look at what we saw when the naira was hitting the roof, almost touching 500. Almost every day it was going up about 5%, 10%.
By
that's
December,
volatile. That's volatility. Volatility in terms of you can't actually predict, or through probability distribution analysis, be able to determine where to trend. Just going on.
So when you heard late yesterday evening or this morning that for about $457.3 million was the additional money that the central bank pumped into about 3-4 windows yesterday, sports, forward FX, the wholesale market, the invisibles under that, and the SMEs, you think this is significant? This is almost $500 billion in a single day.
Very significant, and that comes again from that position of strength. Like I mentioned, it's a managed through the exchange rate system. You need the watchers. The reason why we had an attack on the naira and naira instability, since about mid last year up to recent time, was because of the external shock on external reserves. Oil production, agitation, militants in the Niger Delta, pipeline vandalization. Oil price was tanking because of shale oil and other factors. And like I told you, the central bank contributes about supply 80%. 80% is very significant. So if you have an agent in the market, like in the foreign exchange market,
gives you liquidity, it gives you the float.
Yeah, and there's almost like a permanent shock to his revenue, to the stream, then you have the confusion. But we've seen government, becoming more benevolent, the federal government, in terms of engaging the Niger Delta rather than being combative. I've seen that increase in crude oil production from about 1.2, 1.1 million barrels per day to about an average of 1.7, 1.9 million barrels per day. The Minister of Petroleum says about 2 million barrels. That's significant. OPEC and non-OPEC. No, Saudi Arabia, Dragon Fruit, saying that it will not agree on the OPEC cartel cut of output to influence price, which is the reason why it was formed. And eventually Saudi Arabia run into fiscal dilemma and having to concede that position of protecting market share and release market share. So all that combination. So in the short to medium term, the impact on stable naira is still consequent on adequate production of crude oil and OPEC and non-OPEC agreements staying.